All right, well, I'll just jump into it.
Beautiful.
Hi, everybody. I'm Tom, and I'm here with Roger Ruhr. He's a loan officer, a local guy here, and I wanted to bring him in. I actually asked him to come and sit down with me for a couple of reasons, but one, because I work with a lot of first-time home buyers, and I don't think I've ever met a first-time home buyer that knew exactly what they were doing. In fact, most people have no idea what they're doing when they're kind of getting into buying their first home. And there was a stat that I read, and correct me, Roger, if I'm wrong here, but the average age nationally of a first-time home buyer from, I think it was 2023 to 2024, increased from 34 years old to 39.
I believe that's correct.
Yeah,
Yes.
and I'm 31, and so as a result, I'm working with a lot of high school friends, high school people that I went to high school with, college friends, just a lot of people my age, and I want to make sure that, hey, for those people out there that maybe they're renting right now and they are able to buy, but they just don't know it because there's a lot of common myths out there that are kind of preventing them from even starting the process to figuring out if it's possible for them. I want to kind of bust the myths for, if that's something
That's
that,
great.
and just answer some of these common questions that I get that I know Roger, you get as well. Even just talking about some of these terms, what's FHA versus conventional, it's stuff that if you've never done this before, you don't know.
You don't know.
And
That's right.
maybe you can't even go and ask your parents because they've owned their house for the last 30 years.
Right.
So I'm going to make this very simple, and I'm just going to kind of go down this line. I've got a list of questions that I think are important to talk about, and answer them the best that you can, and I'll see if I can get more information out of
Great.
certain ones that I think I want to make sure that we're covering for first-time home buyers out there, and I know there's a lot of these that are tough to answer because in your world, it's like this isn't a black and white question that you can answer without seeing all of the information.
That's right. That's right.
I don't have their credit score. I don't know how much money they have in their bank. I don't know what their loan to value, like that sort of thing. They just, So anyway, bear with us. But I think this is going to be really good information for first-time home buyers, and even if you're not a first-time home buyer, there's just good information in here. So anyway, Roger, sorry for just talking
Oh, you're
so
doing
much.
great.
Why don't you just let us know who you are, what company you work for, how long you've been doing this.
Yep. Roger Ruhr with Fairway Independent Mortgage. I've been a lender for a little over 40 years.
Wow.
Yeah.
Awesome. So you've done this before. You're
Yeah,
not
done this a
practicing.
little bit.
Not
Yep.
practicing on.
Yep.
Awesome.
Yep.
Very good. So I know one of the questions that I get is somebody comes up to me and says, "What can I afford?" And I'm like, I don't know. Talk to a lender.
Right. Right. Good question.
Get pre-approved. When they do get pre-approved, typically you give them a number and say you're pre-approved up to this number. What does that mean for a first-time home buyer? Can they buy up to that number comfortably? I know, again, that's a tough question. But
Great question. It is a great question. When someone comes in, they want to be pre-approved. Typically, they have maybe a rent number that they're paying in mind,
Yeah.
or they've looked at some homes and they want to know if they can purchase that home and if they qualify. In many cases, we can go a lot higher than maybe their personal comfort level would be. And we've got programs that can go up to basically 55% of their income.
Wow.
So.
Yeah. What would you recommend? I know that you're not a financial advisor, but
Yeah,
what's a number that you're like, hey, this is your salary?
Of your take-home pay,
Yep.
25%.
Okay.
Yeah, is
Yeah.
a typical comfortable
Yeah.
payment that someone can afford.
And maybe that's maybe that's tough to hit in today's
Yeah,
housing market.
it is.
You know,
I mean, I think that
but
is.
that's a good number to
Yep.
shoot for.
Yeah, you know, a lot of clients that have increasing income. Maybe there's another person that's going to be living in the household that'll help them support that.
Yep.
So those ratios can be a lot higher than that, and it's still
Sure.
comfortable. But as a typical rule, 25% of your take home is a
Very
comfortable
good.
number. Yep.
Yeah. Yeah. How about credit score? So I know, especially with first time home buyers, when I first graduated college, I didn't have, or I think it was right as I was coming out of college. I didn't even have a credit score. I didn't have a credit card. You know, and so what's like a ballpark number that you're like, yeah, this is a good number to shoot for, and then above that is great.
Yep, yep. So I mean, 680 would be a good starting number, but I mean, I can work with clients and help them improve their credit score. So once we get sit down, I will look through their credit file, and then we can look at ways to increase their credit score if that's something that would be beneficial to them.
What's like the easiest way to quickly increase your credit score? I mean, is paying off debts what's the
You know, that seems like it would be something that would be a good way to do that. But basically, there's algorithms that the credit bureaus use today, and they're a big factor that people don't know about is how much of their credit they're using on, say, a credit card, things like that.
Sure.
And that's some of those things. I have some tools that can help analyze that.
Yeah.
And we can project what things they could do on their credit to improve their credit score.
Yeah.
Yep.
Very good. Okay. So this is another tough question, but one that I get a lot is, should I just go and work with this lender that you recommend? There's a lot of lenders out there. There's experts that say that you should shop around and see what this lender can do for you versus this lender. How much, like, for if all the variables are the same and you're working with lenders that you know and you trust, how much do you think difference as far as a rate would go? Would it fluctuate?
Depending on the day, we might see, but maybe 0.25% in rate. That's probably typical.
Probably not much more than that.
No, not
Yeah.
much more than that.
So I know we were just kind of chit-chatting before this, before we actually got everything started, and we were talking about the difference between lenders. And I've never personally actually shopped around, and the reason that I haven't is I've worked with Roger a number of times in the past, and I know Roger, I trust Roger, and not all lenders are the same, especially once you get past the accepted offer timeline and you're in the transaction.
That's correct.
And something unforeseen comes up, and
Right.
it does, because there's 1,000 things that goes on in the background of purchasing a home, and once in a while you just find yourself into a jam, and Roger has gotten us out of numerous jams. And it's because you've had 40 years of experience, That's not something that every lender can say. That's just a little shameless plug for
thank you.
Roger. He does such a good job. That's the reason that I don't personally shop around. I don't think that small difference in a rate, that maybe I could get a 0.1% better rate somewhere else, or maybe I can't. I don't know. But,
Right.
But I think that's more important to me. And so, anyway,
Yeah.
let's see, closing costs. How often I've had somebody come up to me and say, hey, I'm ready to buy a home. I've got, this much. I've got a down payment for, I'd like to put 5% down, 10% down, whatever. And then I'm like, okay, have you heard about closing costs? Do you kind of know what you're talking about there? And they're like, closing costs, with a big question mark above their head,
Yeah.
What are closing costs? How much do they usually? What percentage do they usually?
What
cost?
percentage of the purchase price generally is 2 to 5% of the purchase price, which that includes such things as your homeowner's insurance needs to be paid 1 year in advance.
Okay. Yep.
Your taxes and insurance need to be escrowed, so there's a few months worth of escrows there. There's an appraisal fee. There's a title company has fees. We have some processing and underwriting fees on our end. Then there's discount points when you based on your interest rate, those types of things. So when you add all of those up, generally it's going to be somewhere between 2 to 5% of your purchase price.
Yeah. So basically everything that goes on in the background of a transaction
Correct.
needs to be paid for.
Yep.
There's a lot of people working.
A lot of people doing their, you got
Right.
broker administration fee for realtors.
Yeah. And we'll talk about discount points here in a little bit as well.
Sure.
But how much do I need to have saved? I'm going to just kind of use that as like a segue into the next question. Because it's a very common myth, and I've heard twice this year alone that, do I need to have 20% saved? That's just a benchmark number that you hear a lot. No, that's a common myth.
That's correct.
But there's a lot of first-time homebuyer programs that are out there, and I'm curious. Like I said, you don't need to just go into details on every single one of them. But what kind of first-time homebuyer programs are out there for?
Yeah, so great programs, particularly the Buffalo going west and south area. There's USDA is a great program for first-time homebuyers, 0% down. You have a great realtor like yourself, Tommy, and if the value of the home is higher than the purchase price, they can even finance some of their closing costs. So they can get in, many of my clients get in for zero down, maybe $500 down in the right situation.
Wow.
Yeah.
Okay. So helping out with closing costs. Are there any, and I don't even know the answer to this question. Are there some that help with down payments or anything like that?
Yes, there are. Yep. So, there's a number of programs that can help with that. Minnesota Housing Finance can help with that. There's program, USDA, VA loans, if you're a veteran, 3 to 5% down for conventional loans.
Wow. Yeah. So, and I would speculate that for a specific buyer, it's going to depend on their situation on which one is going to be like, hey, you know what, I'm going to put you down this funnel because this one's going to help you out the best because of your situation.
Yep.
And that's something that you can help with.
Correct. Once the application comes in, we'll take a look at all that, and it'll become very clear what is their best option.
Perfect.
Yep.
And that's why you talk to a lender first. Okay. 0% down, 3.5%. That's just, it's just that busting that myth of 20%.
Right.
Very good. So
Tommy, I got a question for you.
Yeah.
First-time home buyer, buyers will come to me and ask me, "Hey, is it worthwhile buying now, or do I wait?" What is a realtor? How do you respond to that?
Yeah, let me take a page out of your book. Well, it depends on the situation. Everybody's situation is different, and there's a lot of people that I've talked to that they said, "Hey, I'd really love to buy a house," and I kind of dig into their situation, and maybe this person isn't really sure where they're going to work next year, or they've been thinking about moving down to the cities. I actually recommend staying where they are, renting. I think, if you go, and I've ran the numbers even for specific people, I'm like, okay, you rent for 1 year, this is what your rent payment is, this is how much you're going to be putting into it, versus if you go and buy right now, you pay closing costs, you've got your down payment, and then you go sell, say 5% increase over a year, which is probably a pretty positive number year over year, and then you go and sell, you're going to have your realtor fees, this and that. You're probably paying less renting if you're going to be selling in 1 year.
Sure.
You know what I mean?
Yeah.
Is it a good time? There's still good deals out there.
Yeah.
One thing that I talked about in a recent video was what type of home I would be looking for in a tough market. I mean, it is. The housing prices are high. Rates are higher than they were in 2021. Everybody always compares to 2021, but it's expensive. I mean, there's no way around saying that buying a home isn't expensive. So I say what I would be looking for as a first-time home buyer, I would be looking for a home that I walk into and I say, "Ugh, this is kind of rough."
Right.
And I'm looking for cosmetic issues, things like dirty, gross carpet. I'm looking for a house that's just been kind of abused.
Sure.
Not structurally abused, but cosmetically, where I can go in. I can pop this carpet out, I can paint the whole house, and it's a whole new house. That's what I'd be looking for if I was a first-time home buyer.
Yep.
But again, it really depends on the situation.
Right,
So,
right. Yeah, I'd like to share with you, you talked about, interest rates and affordability and those types of things. And again, when I look back, and I tell my clients this, when I look back 40 years ago, the bank I worked at, people were lined up outside all night long to get a 10% rate.
crazy.
Yeah.
Yeah.
The other thing is I have a historical chart of what mortgage rates have been for the last 200 plus years. In today's rate environment, you could go back to 1815 and the interest rates were at where we're at today in the market.
Yeah.
So
Yeah.
it is still a good time to buy.
Yep.
It really is.
Yep.
With a good agent and buying right, it's a good time to buy.
And making sure, that we're doing our due diligence with the buyer to know that, hey, yeah, you can afford this.
Yep.
This is what it's going to look like. This is how it's going to compare to your monthly payment that you're looking for.
Right.
We can really figure those things out beforehand. So,
Right. And it takes, Tommy does an amazing job.
Yeah, thank you.
You really do.
Mortgage insurance. So we talked about the 20%. That's kind of where the myth came from. Is at 20% is where mortgage insurance drops off. If you're buying a home and you put 0, 3, 3.5, 5% down, anything under 20%, you're going to have mortgage insurance. Can you tell us a little bit about what is mortgage insurance? How much is it? How long does it last?
Yeah. Great question. Mortgage insurance it's protection for the lender in case of default. So if you put less than 20% down, you're going to have some type of mortgage insurance, what's called, also known as PMI. The different conventional loans are going to have mortgage insurance. That on conventional loans, that in the premium amount is based on your credit,
Okay.
and and the debt to income ratio. Yep. Or I should say loan to value.
Yeah.
Mortgage insurance on FHA loans is there's an upfront mortgage insurance premium that's paid, and then also there is a monthly mortgage insurance premium as well. FHA, the credit score is not the factor. Conventional loans, it matters more. So if you have good credit, conventional mortgage insurance premium is going to be generally, in a general sense, less. FHA is a great option for those that maybe have a lower credit score and you're putting less money down.
All right. So hypothetically, I'm going out, I'm buying a $250,000 house on an FHA loan, and I'm putting 5% down.
Yep.
Am I looking at like $15 a month or $400 a month?
You're going to be looking at probably about a $75 a month payment.
Okay. Yeah. So it's not outrageous. It's just something that has to be paid if you're putting less than 20% down.
Correct.
Cool. Last thing, you mentioned points earlier. That was kind of rolled into closing costs. When you say points, it in the traditional mind of a person, we don't know what is.
Yep.
We don't know what that means.
That's a
points?
great question. So points are basically, it's 1% of your loan amount is considered 1 point.
Okay.
That amount, that the fund that is collected for that is basically paid to the servicer to purchase and service your loan.
Okay.
In today's rate environment, the points, the servicers are basically not understanding that they're probably going to end up you're going to end up refinancing that loan if you purchase something now, because we're hoping that the rates will come down. Servicers are not anticipating they're going to keep that mortgage that long, so some of those discount points are a little higher in today's environment versus what they were when you said like back 2021, because those loans were that lower interest rate. The chances of those being refinanced are a lot less than what today's rate environment is.
So how about somebody who's got some extra cash and they want to buy down their rate?
Yep. Great.
That utilizes points. Say I want to buy down the rate with 1 point.
Yep, and that's a great option. I mean, that can be done. It's just a matter of the break even of, does it make sense based on a current whatever the interest rate that we're looking at, and the advantage of paying more money to buy that rate down what is that difference, and does it make sense to do that?
Yeah,
Yep.
yeah, and
You
that
can
was
do that.
was a question that I've actually tackled with a little bit myself. Was like, if I take this extra $5,000 that I have, right? Do I buy down my rate 1 point, or at 1 point? Does that usually like transfer to like a quarter of a percent?
Eighth of a percent.
An eighth
Yeah,
of a percent.
generally.
Okay.
Yep.
So do I do that, or do I take that extra $5,000 and put it towards my down payment?
Correct. Yep.
And it's a tough question because you really don't know how to answer it unless you know how long am I staying in this house? And there's going to be a time where your two lines are going to cross.
That's correct.
Where all of a sudden, hey, putting it down on the interest rate is going to make sense at 8 years plus. If you're not going to be there for those 8 years, then just putting it on your down payment is going to be more cost effective for you.
Absolutely. Yeah. Great analogy.
Anything else that you have for first time home buyers? Any tips? Or I just went through all the questions. I think we kind of answered everything.
Yeah. I think a big point is, let's sit down, let's get together right away.
Yeah.
The sooner we can get together, we can work on credit. I can help you make your situation better to buy. We'll work together with Tommy and the group here. We'll make your situation better. The sooner we can get together, sit down, let's analyze your situation, and that'll help you. When you're ready to buy, all those questions will be answered, and you'll be able to concentrate on your purchase.
Right. Let's do that before we go out and look at a bunch of properties. You're going to fall in love with one, and all of a sudden it's like, now you got to get pre-approved. How long does that take?
Right.
That happens. So make sure you talk to Roger first, and then talk to me, and we'll get you rolling. So thank you, Roger. Appreciate it.
Thank you so
This was
much,
awesome.
Tommy. This has been great.